Welcome to the Corner Office, where we bring you the latest news from the world of commercial real estate, the greatest voices in the industry, and the corporate chats you've been missing. Let's get to it.
Stefano Contardo, I know you as Steph, obviously CEO of Improvon Group, which is a lot bigger than where I remember when we first started. I got to Joburg in it must have been around 2009. Big portfolio at that stage. Obviously one of the biggest developers or industrial developers certainly in Johannesburg. And I remember those initial interactions. At that stage, I think George was CEO.
Correct, yeah.
I remember that you're a lot easier to speak to than George is what I can remember. But yeah, I remember those days and some of the trips to Sun City and, you know, all the best developments were you guys, beautiful buildings and just like a very different and forward-thinking style. So it's interesting to see later, obviously, the acquisition by Actus and the decision not to list. And there's a lot to talk about today. So it's great to have you in our little studio here, and it's great to have the opportunity to chat and just unpack the industrial and logistics market a little bit and where you guys are. I wanted to start off by saying, you started at St. David's. You've obviously had to claw your way up from the bottom of the hill there, you know.
Well, I wanted to say thank you for having me, but I think I might just skip that now.
No, St. David's actually at the top of the hill. Good contacts there. A lot of the guys that I met went there. Very, very connected guys. So it obviously seems like a school which holds like that kind of, connection and deeply embedded in the Joburg community. And obviously one of the top schools there. You were head boy, I hear. An excellent water polo player, I also hear. But that's, we can debate that. I'm not sure where.
You might have some credentials yourself.
I might. So, yeah, interesting to chat. But tell us a little bit about Improvon. I mean, 95, interesting year to start, just first of all. I mean, massive turmoil in the country. A lot of people actually don't know where the country's going and what's happening, and Improvon starts in 95. What was happening then? I know there were the brothers and the DaCosta brothers and, the story.
I'll give you a bit of background. First and foremost, maybe just to pick up on your introduction, just to say thank you for having me here. It's good to be here. It's always good to spend a bit of time and catch up with yourself. Like you said, we go back quite a bit, so interesting times. And the industry's moved quite a lot since then. But going back to 95, I think you look at it as a difficult part of the country's history, and probably a time when people were putting their tails between their legs and trying not to do anything.
Massive, yeah.
And funnily enough, these four brothers who started out as in the construction industry had incredible foresight and saw an opportunity where they literally plotted out a business plan, which they still have today. It's a set of files, yay thick, that they're quite proud of, in the sense that they managed to plot out this business plan for a business that they could see running into the future when, like I said, everybody was literally making for the hills. So at that time, interest rates were running this massive uncertainty, and the opportunity from their side.
What, 4 years later, interest rates would be up the 20%.
Correct.
Yeah,
correct.
Even over, I think.
That's a crazy environment in which to operate. I mean, we're sitting at 11.75 at the moment, and a hell of a difficult environment for us to operate. You can just imagine 20% interest rates make it really tough. So, at that time, the premise or the underlying basis of their business plan was looking at creating value as opposed to turning jobs and earning profit, and that sort of underpinned the foundation of where the business is today. So the business came out of an environment where they had a construction expertise. They coupled it with investment expertise and targeted one single sector, specifically the logistics, warehousing, distribution sector, which is quite interesting because, you talk to 2009 and when you came up to Joburg, and we were reasonably established and there weren't many people operating in the same space that we were then.
Yeah, just that. Maybe what, Interprop? No, but they were also an office.
Before Interprop, yeah. I mean, Interprop had just probably come off doing the Fricker Road type developments, and I think they're probably busy with the
Dickinson developments.
Yeah, Dickinson. Yeah, the likes of probably JT Ross and Collins.
JT Ross, yeah.
But geographically, specifically in Gauteng, it was quite limited, and having a niche-focused investment portfolio was quite intriguing because obviously they built up that expertise from 95 and being intrinsically involved in the physical construction and development of the assets, obviously paid their school fees through the years, learned what worked, learned what didn't, kept abreast with advances in the market and new technologies and what worked for clients. And put together a product that wasn't just fit for purpose at a particular point in time or for a particular sector, but also something that was adaptable to cover multiple sectors. And if you look at some of the principles that most people are developing today in the industrial sector, we call it industrial, I suppose, but the sexy term at the moment is logistics. And if you look at those principles, those were the principles that sort of underpinned the values that were inherent in the developments 10, 15, 20 years ago already. Good yards, clear height to underside of eaves, good circulation, and a good roof. And you got the fundamentals for a great warehouse.
And good looking.
And good looking. And
they were good looking. That's the one thing I remember about the Improvon portfolio compared to pretty much 90% of everything else out there. They were good looking.
You see, that comes from being paternal. If you're looking to develop something and hold on to it and, parade it around to your friends and your peers and everybody, it needs to be something that you're going to be proud of. And I think, that probably set them apart from a lot of the developers early on, where people were looking to turn for somebody else and, creating an asset that somebody else would own. And they weren't really taking a paternal long-term view on things. And in their environment, another big aspect of it was always landscaping. So especially in the long meadow.
That's right, actually, just thinking about it, yeah.
Great gardens and good aesthetics in the office component, and coupled with an environment that sort of lent itself more to a combined head office warehouse development as opposed to purely like heavy industrial space, made for an environment that was a lot more desirable for businesses that were looking to establish themselves. So I think, there was quite a bit that happened over time, quite a bit that set Improvon apart from, the rest of the players in the market.
What was the first building? Meadowdale or something?
Geez, the first building, it's an interesting question. In fact, probably I would have said maybe out by Founder's View. Maybe,
okay.
In fact, Meadowdale's probably not a bad bet. I know they did a few developments then. And so probably Meadowdale close to...
Portal frame, green roof, brown face brick.
I think you know it too well.
Yeah. That's what it's about.
Exactly So, But
it's interesting though, looking at Improvon's portfolio and over time and getting to also know the different players in Improvon, yourself, George, and really the team around you. It's an interesting space to be in. And Ricardo actually reminded me of something, and he said one of the most humbling things for him was, he came to your offices, and one thing that you do at Improvon is you personally will make someone a coffee, invite them into the office, and it's quite like it's the kind of thing you do when you invite someone into your home, not necessarily the kind of thing you do when you invite someone to your office. When people invite you to the office, then someone will come in and take an order, and you'll say, we'll have this, and it'll arrive. When you go to Improvon, actually the CEO makes you a coffee, and you sit down, and that you were talking about paternal and talking about the environment. That's what it feels like there. Is that?
Look, it's definitely something I'm quite conscious of, and I try to inculcate into the business. And I mean, the rationale behind it is the product is reasonably generic. Anybody can put up a building, anybody can buy a good piece of land, put it together, and with a bit of experience, you put out a good product. So your main differentiator across any platform is going to be people. So if you create the right type of attitude, the right type of people, the right environment, you can create the relationships. And in the property sector, I mean, you'll know as well as most, that relationships are really the fundamental of what's going to make a successful long-term venture, as opposed to, somebody who's a flash in the pan.
Yeah.
So,
really the development, and speaking to that, like you were saying, is it's that overspend actually today that future-proofs the building. So you might be able to cut corners, you might be able to get it a bit cheaper, and you might be able to boost your initial yield, but that overspend, something that I see an Equity is also doing. There's a bit of an overspend in terms of making it slightly better, creating a nice environment, the landscaping, etc. Like that. It really does attract a high rental at the end of the day, and you probably don't end up sacrificing too much in terms of yield, but you certainly future-proof it, which...
Yeah, look, and I mean, if you've got a long-term view on the assets, which, I mean, any fundamental of property should really, in my opinion, you should have a reasonably long-term view on things. I suppose it's debatable, there's many sides to argue it, but if you've got a long-term view on the asset and you want to hold it, then obviously quality is key.
Yeah.
And quality is something that comes at a bit of a premium, and there's different ways that you're going to spend on quality. Yeah. One aspect is using the right materials, design and equipment. The other side, when I say design, it's more about the fundamentals around the building layout. So that quality that's kind of hardwired into the building, and that not only future proofs it, Might cost a little more because you've got less coverage possibly on the development and you've got more circulation or whatever it is. But the value comes in long term on your vacancy side of things, because it's far more easy to tenant because you open yourselves up to a bigger market. You
found this similar in office. So as soon as it was P grade and it was, it had like a Green Star rating or whatever it is, it was tenanted almost immediately because of the lower operating costs, because of the look of the building, because of the way that it felt to be in the building for the people who actually occupied. And I think that again goes to, like a bit of a fundamental philosophy. Are you just building it functionally, or actually are you building it as a service? Because that's one thing that like a lot of people don't think about. And it's something that's certainly in my career has definitely transitioned. People used to build, and I started in this industry in around 2006. People build functionally. That's it. They were building an industrial portal frame. It had the ability to be split down. You could split the office in half. You had the doors on either side. It was sort of 80% coverage type of thing. Or that's certainly what it was in Cape Town. And then suddenly you had this different outlook and things. In Cape Town, it was Airport City, and then you had Montague Gardens and that sort of area as it expanded. In Joburg, it was Longmeadow, Limbro Park. I think Limbro Park had the first feel for it, and then Longmeadow, and then obviously what happened out on the R21 with JT Ross and Plumbago, etc., had this very different feel where they were actually offering more of a service and thinking about what the client wanted than building a building and saying, well, you take that because that's all you can get type of thing. So it's actually a philosophy. It's more of a fundamental approach, and we see that in offices as well. Certainly the offices at work.
Very much so. And I think, there's two different lines of thought there. So often you can develop on the back of a lease for a turnkey project for a particular tenant. Yeah. And, there it's obviously a question of marrying the development to the needs of the client, while still trying to maintain some form of, a generic type basis which could accommodate other clients. And then the other side of it is developing speculatively, which we do a lot of because we try and push the market and drive the turnover in our business for growth. So if you're developing speculatively, then you have to have a good understanding of what the majority of the market wants, and then you have to try and design to accommodate the majority of the market. So you'll make certain sacrifices, because you'll find guys that come in and say, that's great, I can operate out of a grade building because I just sideload. And you say, well, that's fantastic, because when you leave, I've got to try and accommodate somebody else, and they want a dock. So I'm going to give you docks, and then I'm going to try and bring in a grade section in the building, or I'll give you some ramps or whatever it is.
Do both, yeah.
So we'll accommodate the needs so that when they leave, the next person comes in. And even if there's a cost premium to it, you might take a bit of a knock up front and say, okay, well, you shave off a couple of bips on the yield, but for this purpose, we know that later on we're going to get the value out of it. Yeah. So
tell me about building cost in this environment now. So, I mean, we've seen steel prices go ballistic. It's almost, it's hard enough trying to develop. Now, all of a sudden, your steel prices go, 50% or even more. Suddenly, your build cost goes from 5,000-6,000 Rand a square meter, I'd see in most feasibilities, to suddenly it's going 8,000, and keep going, on the build cost. Yeah. How are you seeing tenants actually accommodating that? Because most feasibilities we say come out now are sort of 90 Rand net, which is...
No, it's heavy.
I mean, I could go get an office in Sandton for 90 Rand, and it was never... I mean, these two have converged like I've never seen anything in my life.
Yeah, but I suppose you've got, rentals coming down on the office side and, rentals going up on the industrial side. And interestingly, I mean, if you look, rentals in the Longmeadow type node were reasonably stagnant for 5 to 7 years. So, I mean, there was definitely going to be some form of compression building up, and then they had to run. Yeah. So at that point, I mean, it's understandable to see rentals having gone up. I think on the office side, it'll be hell of a difficult to build a P-grade office block, a 90 net rental. I mean,
the only crane I see in the sky is this car track over here around the corner.
Yeah.
So that's it.
And that's owner-occupier. Yeah. So they're not looking at yield. It's a different story.
And I think listed they've got their business in the US, and so they're making some hard currency, boy.
Yeah, probably sitting on the land prior to that. I'm not even sure.
They were.
Yeah. So, I mean, the fundamentals are different. And coming back to building costs and how it translates into rentals, agreed, rentals have moved quite significantly over time. Yes, it is a product of building costs, but it's also got to be market related. So it comes down to supply and demand dynamics in the industry. It comes down to quality stock. It comes down to, more modern purpose-built facility which suits tenants' needs. And obviously, tenants get the benefit in terms of their operational efficiencies. And so they'll pay a bit of a premium for it because they're going to be saving somewhere else. So those translate across. But if you look at, we talk pure raw input costs that have escalated over time, steel being probably the biggest one, but everything's moved. And if you look at land costs, I mean, the big issue coming in here, in my opinion, is, there's soon going to be a shortage of really good zone service land.
If not already.
Yeah,
I think it's there. I think it's there now.
Look, there's some good chunks of land that are being built out over time, but when those are used up in the next 5 years or so, then there's definitely a shortage of land, and the shortage isn't because there isn't land around. I mean, it's just a question of getting proper services to the sites. So, I mean, service delivery from a municipal perspective is under pressure. I mean, we see it in a personal capacity. We're having water shifting now. We've got issues with Eskom. Roads.
Is that what it's called?
Potholes.
Water shifting.
Yeah. So, what's next?
I mean, the guys at Attack were actually saying to me the other day they've got that big site next to on the eastern side. Sorry, on the eastern side, and they had built a big pipeline, and then they turned the tap on. There's nothing there. They said, "Oh, sorry, you want the water as well?" Thanks. So it is actually a big challenge at the moment. I mean, we're in a situation in Joburg where service delivery is, I don't know, can we say it's failed? We're just grinding the bottom,
if not failed.
Failing, yeah.
And I think it's quite intriguing because we've been dealing quite a bit with councils of late, and there are incredible pockets of excellence in the councils. So, everybody bashes them, and I think it's important probably to start off by saying there are definite pockets of excellence within the councils, and there's definitely a desire to do well, amongst, I'd say, a good portion of people. Like everything else, you got a couple of bad apples that probably spoil the cart for the rest of the team, and what happens is funds get misappropriated, or there's just a lack of skills to deploy funds correctly. And those two aspects have obviously started this decay of our infrastructure, in specifically in Gauteng. I mean, we're seeing it the worst here. I suppose there's other municipalities that are probably far worse, in fact. But for us as the center, the economic hub of the country, you kind of rely on the infrastructure to be able to service that.
Big time.
So
it's also a sentiment, and I love the fact that you're saying there are these pockets of excellence, and it also starts from the communities. In my opinion, it's something where you look at. Take the Spruit, for example. It's a nice. Everywhere else in the world, you're on the river, you pay more money for the property. In South Africa, you're on the river, fuck you, you're out of there.
Everyone's going.
So why can't things like those be improved by the public? We can sit here and moan. We can sit here and say, "Oh, it's their role, their role." Everyone can point fingers. There's no money there, so the community might as well do it. They might as well get stuck in, because I've just recently come back. My sister lives in Mallorca in Spain, and the community works for the benefit of the community. It's amazing to see. It really, I mean, there's a guy that goes around, sharpens your knives. You leave them out the kitchen window, sharpens your knives, doesn't steal them. He just
doesn't attack you with them.
Fantastic. There's one guy comes around, he takes all the the boxes of veg that you leave out. Like, it's an interesting little community, and
we're not set up to be communities. I mean, the way we live is behind a high wall with an electric fence. We're actually isolating ourselves. It's the total opposite. In Europe, you come out of your apartment. If you're living in the city, you go downstairs and there's a coffee bar in the corner, and you meet in the coffee bar and you chat to your neighbors.
Your community,
You share about
You're right,
community. Here we are insular, and for obvious reasons, but I mean, we keep to ourselves, and that interaction between neighbors is limited. I mean, there's drives to try and build communities and try and build, but it's difficult. So, I think it's going to be a bit of an uphill battle to get that right. And then, I mean, the Spruit, can probably clean it up, fix it up. And if you look at like Delta Park, for example, I mean, the guys have done an incredible job there. There's obviously considered efforts to improve that. You got a couple of good businesses that run it and attract people, and there's always a good vibe there and stuff. But you still have the Spruit running through it. If you've got sewage running down the river, it kind of ruins it, no matter what you do to improve this around.
Yeah. So although you can't swim in the Seine either, or Seine, or whatever it is in Paris. They want to do it for the Olympics, all the rest of it. It was banned in 1937 or something ridiculous, swimming in the river in Paris, and they want to open it up for but every now and then there's a little bit of something that comes down there, and they think, we're not going to swim the guys down a bit. Same thing.
Same.
So listen,
Thames in London, I mean, they've just installed a parallel sewer system underground, which is a massive concrete infrastructure project, which is to try and avoid any further spills or
Really,
yeah. I mean, it's a worldwide issue, major water courses, but
crazy. Yeah. The other thing I want to chat about is you guys have. I mean, originally you started doing some stuff in Zambia, and I think that was probably to do with actors. Yeah, at that stage. Now Kenya. What's the focus there? And can you draw a parallel between Kenya and South Africa? What are they doing right? What are we doing wrong? What's the opportunity? And is there more opportunity, in your opinion, in Kenya than there is in South Africa? And why? And what's happening there? Is there a culture that they're engendering? Is there...
Yeah, look, you've asked a couple of questions there. Let me jump into them and sort of knock them out. Otherwise, we're going to run away with them. But yeah, so in 2016, we were looking at changing up the business and finding a way to inject additional capital into the business and achieve various objectives through that. And interestingly enough, you mentioned listing, etc., and we're obviously looking at that at the time. And there was Brexit, and there was Trump, and it was volatile. And at the same time, we were talking to actors about...
Hopefully you didn't.
Yeah, no, thank goodness. And we were talking to actors about exploring these other opportunities because, they, as one of their funds, they do property development and investment, and they realized they didn't have a skill set on the industrial side, and they thought, well, let's profile the market and see if we can partner with a developer or investor that had like-minded objectives. So we were talking to them about the Zambian operation, and eventually we said, well, we're not going to list. So I don't know how keen we really are, but if you want us to join you properly into sub-Saharan Africa, and then you need to join us in Southern Africa. And they said, well, we don't have a mandate. We said, well, make a plan. And to their credit, actors did, and they've been really good to their word. The objective was to come in as investors, to put the capital in and to let us run the business, and they've done exactly that. And I think the partnership has really worked well for both parties. We've delivered on our mandate. They've delivered on theirs, and we've had a fantastic relationship. So it was a really good partnership. I think what we learned out of that is that obviously Africa is a very diverse continent. You look at it, separate countries. They each have their own flavor. They each have their own culture, their own way of doing things. And specifically, if you look at Zambia, the guys don't necessarily need to operate out of an A-grade modern warehouse or distribution center. So they don't have that drive for efficiency and quick turnarounds and A-grade facilities. So that product, while we've managed to develop and we've got product there and it's going reasonably well and it stays pretty much vacant throughout the time, we're not expanding our development into the Zambian market right now. I think...
Was that York Industrial?
Industrial Park. I mean, product's great. The philosophy we try to roll out is that we want A-grade premium industrial investments, warehousing, distribution, light industrial investments. And so we try and carry that theme, that flavor through into the development.
Is it the affordability, or is it that they just have no use for it?
The practical nature. I mean, why do they need volumetric capacity if you can just stack pallets under a shed in the open? In their world, it's slightly different. They're not too fussed. So you can find like cases of beers stacked in a shed with a dirt yard. It's not concrete. There's nothing to it. So, I mean, that fundamentally is never going to have a similar cost to an A-grade building built at dock height.
Do you think it follows policy? So, in South Africa, you basically can't do that, for example. Like food must be in such an environment, and maybe liquor must be in such an environment where people don't want, the actual consumer doesn't want an older bottle. I mean, I remember years ago, and this is... SAB have these, what they call sock sites, which are sort, overpack, and colours. And what they do is they get all these bottles in, and they sort them and say, well, this one can kind of be used again, and this one can definitely be used again. Okay, that one stays in South Africa. This one, that gets culleted, it gets smashed and gets remade, But this is a terrible one, send it to Africa, And that's basically what they were doing. And so if you go and look at the quality actually of your quart bottle or your bottle of beer, it's like a B-grade bottle. And I mean, is that the...
Look, I think the consumer base is a lot less discerning. I mean, here, obviously, you've got in the PWV triangle, probably 12 to 13 million people at the moment, probably represents the majority of the consumer base of the South African market, obviously, out of the other big metropoles. And as a result, you have to cater for this type of market. In Lusaka, for example, I don't think that the standards are implemented as highly or not necessarily implemented, but enforced to the same sort of standards as they should be in other places. And I mean, not to say that it's about alcohol, liquor, but it's about tins of food, or it's about materials, or whatever it is. There's just less of an absolute need to store product in a particular way. So from that, I mean, it'll be a little bit behind. Maybe in time it'll get there, and the product or the property product will become more desirable over time. So if that will work, we'll see. But in the Kenyan market, for example, the Kenyan market, you asked about parallels between Nairobi and Johannesburg, for example. I mean, as you go further north into Africa, it becomes more equatorial, a lot hotter, not really. So Nairobi is, interestingly enough, about 1,500 meters above sea level, very similar to Johannesburg.
Yeah.
It's also landlocked, 500 k's from the coast, very similar to Joburg. It's not on any major watercourse. Like most major cities in the world are either on an ocean port or along a major watercourse. Johannesburg is the same issue. And they have a specific purpose for being. Joburg was a mining town, found gold, and that's how it established. Nairobi is basically the center of a trade route that comes into Central Africa. So you come from Mombasa in, and then you go central, north, south, etc. from Nairobi, and that's where the point split, and that's how the city became. And if you look at the city, a lot of people even refer to it as small Joburg. It shares a lot of similarities. You've got jacarandas, you've got quite an old city center, decentralized city center. You've got all these things going on. But interestingly enough, I think the consumer market is progressed to a point where there's need for good A-grade warehousing distribution centers. I don't think that the depth in that market is nearly anywhere near a South African market. Obviously, it'll get there in time, but the consumer is a more discerning consumer. They're buying into the whole e-commerce prospect. You've got a couple of e-commerce operations that are sort of coming to the fore now in Nairobi specifically and around Kenya. So there are a lot of parallels, and I think that market will continue to establish
GDP
itself.
growth there? Do you know those numbers?
It was one of the shining stars in Africa for quite some time. Obviously, COVID put a dampener on it, and I think at the time it was around 5%, and I think it's back to around 2.5%, 3%. I speak under correction, but there's definitely growth, and I mean, incredible activity. If you see what happens in Nairobi itself, and an interesting fact is, over lockdown, everyone was hiding away, locked out of society. In Nairobi, they put up a super freeway, like an expressway that goes from south of the city on Mombasa Road by the airport all the way through the center of town, 20 kilometers of elevated super freeway.
Sure.
Okay, and just how that changes the dynamic. It used to take about 2 hours 20.
Yes, I've heard it's a nightmare.
Get from the airport 20 kilometers up the drag. Now it takes 20 minutes. It's a game changer. And with that,
it used to take like an hour and a half type of thing.
2 hours 20.
Wow.
Yeah, no, it's crazy. So literally knocked 2 hours off a journey.
Traveling that, yeah.
The interesting thing, it's a concession with the Chinese. So you go through like a pagoda toll gate. You pay, I think, $3 or whatever it is. So the interesting thing is that obviously the model works for them because there's enough people using it that it generates the revenue. But the majority of people can't afford $3 for a toll. So the roads below are still packed.
Really?
It's unbelievable. And you got this like...
I suppose same as Hong Kong. You got walkways above the other walkways.
Yeah.
You got the guys on the bottom and you got the guys on the top, and it's just...
But look, it's a game changer. The other big changes that they've made is they've created a ring road around the center of the city. So you've got this major road that comes in and then two roads that go out, almost like a fork. And you've got these ring roads that circle the city, and they've dualed all of those in the last 3 to 4 years. And I mean, that's a game changer because now you've got flowing traffic all the way around the city, so you can move around the city without having to go through the hub as well.
You see, infrastructure investment.
Yeah, huge. But again, there you look, utilities, so your power and your water. Everyone accepts the fact that you're going to have intermittent power supply. It's not called load shedding. There's no schedule that tells you when it's going to happen. You don't plan for it. You just know that you're probably going to be without power here or there or whatever, and you deal with it. That's kind of the standard. I mean, we come from an environment where we had a history of exceptional power supply, better than probably certain parts of Europe and the States. And obviously that's fallen away. And now at least we've got a schedule that tells you when you're going to be without power, and you can plan. And our market's changed significantly, and I think maybe we can.
So what are you guys doing in that space? From what I understand, and what a lot of the guys are doing is they're actually putting in the solar, as in the panels, and then if the client or tenant wants to put in the batteries, then that's almost for their cost, which in some instances can actually be financed by the landlord, but then it's going to be amortized back into the thing.
Yeah, 100%. So I think everybody's sort of got there on their own. There's a few fundamentals that drive it. From our perspective, I've been working on this. I've been a big advocate of solar for quite some time, and I've been wanting to get it going for a long time. It's been quite difficult from a chicken and egg perspective. But
in what sense?
In the sense that if you stick the panels on the roof, somebody wants it for free, and if you say to them, well, I'll put it on for you, but you have to pay for it, then they go, no, it's okay. I don't need it.
Yeah.
And the other interesting thing is that panels don't work as backup without batteries or a Jenny. You need something to harmonize the supply from the panels. So the panels supplement your supply, and the benefit you can pass on to a tenant is a reduced tariff in terms of what's created. So I said tariff, but it's really a rental. So you can capitalize the installation, charge a rental, which will work out cheaper than the consumption they would have used. Okay, so that's the benefit for the tenant. It becomes contractual. They're committed to that supply. The landlord gets a rental. Tenant gets power at a cheaper rate than what they're paying to Eskom. That's great. Then load shedding comes in, and when it starts to get to a point that around 6 hours a day, then it becomes a problem because you've got less production. They're not getting the benefit from the panels, etc. Now you need the backup. And the problem with the backup is the batteries. You don't know what's happening in the cycles, how hard they're driving the batteries, and how long those batteries are going to last. So we say, well, we don't particularly want to take that much risk on the batteries. What we'll do, though, is we'll finance it for you. Yeah, they're huge. They're huge.
Especially for these big facilities. I mean, the kind of things you guys are building require significant power, right?
Yeah.
I mean, a 10,000 square meter building, that's going to typically have, 400-500 amps running into its supply?
Yeah, pretty much. Yeah. Look,
I mean, that's a heavy,
it's a big requirement, but if you look at what the guys are doing, their infrastructure in the actual warehouses is becoming simpler. The only thing that's really been driven by power is their material handling equipment. So, if you can structure that your batteries are being charged by the PV, that's pretty cool. So you work your shifts, so they're charging during the day, etc. So that works. And then lighting's gone LED, so I mean it's low. It doesn't use too much power anymore. So when there's no power, your big loads is really your air cons for office environments, and that's the big issue. So people can live without aircon for 4 hours, 2 hours, whatever it is. You can back up a building quite cheaply and quite efficiently, and then that's cool. But I mean, you can still install a system of 600 kV, and run the building very efficiently with a decent backup system.
I look at you guys are lucky. You've got a huge roof to go put solar on. The office guys, they're struggling. I mean, this building is to capacity on the roof, right? It is full,
and they're heavy power users.
Yeah, they wanted to put it over our bar area. I said no. So it's to capacity. You know what it services? One office within the building.
Sure,
that is it.
Yeah,
and I don't know what they're charging down there, but it's crazy.
I mean, rule of thumb, a few years back, I think 10,000 squares of roof space could generate about a mega power from PV. But I mean, the inconsistency of the power, etc. So now it's probably it's a bit less. I mean, the panels become better, from better efficiency. So your areas come down a bit, but still you need the roof space.
Before we close off, because I know I'm going to get pressure to do exactly that. So tell me, and we've covered nothing that Wes has asked me to talk to you about. So sorry.
Don't worry about Wes. He's not here.
Wes not here. Yeah. Tell me investment strategy. Where are you going? What's the drive? you're going to have a dashboard. You're the CEO of the business. You've got a strategy. What are you deploying capital into now?
So you asked briefly about, is it worthwhile developing in Kenya and those? So it's different. It's slower. I don't think the market's as deep. So from a growth perspective, I think it's a great market to grow in. As long as you can still get dollar-based rentals, currency fluctuations, even in the Kenyan space, are quite significant at the moment. So that could be a problem in time. But I think the basis of, dollar-based rental out of that type of environment is great. And we took a strong position there. I mean, we've got 400,000 squares to build out, 200,000 squares of bulk. So, that'll keep us busy for a while.
Wow.
But the South African context, in my mind, still works. It's a really good, it's a sound market, good market, and provided you got the land assets, you can develop out well. I think strategically, from our perspective, having land in top nodes has been a big strength of ours.
How much you got left?
So we've got probably in the South African context around 30 odd hectares of land, but we got some other pipeline opportunities on the go, which I think will be good for us. So
Everyone's talking about that Van der Merwe Venter site up opposite Kraaifontein or whatever it is. What's going to happen? Everyone's got an offer in there. Everyone's looking at it.
Like Cape Town is in.
It's the obvious expansion corridor. I mean, that R300 strip is done.
Yeah.
Somerset West, what you going to do there? It's not the right way to go. You got to go up the N1, right?
Yeah.
So that's pretty much it, and they know it.
No, I think it's great. It's a question of the demand in Cape Town, which we're obviously seeing. There's massive demand at the moment in Cape Town. To what extent there's need for these mega boxes that are coming through, further mega boxes to come through and to fill that demand, because I think that Kraaifontein node is probably going to cater a bit more towards that. And I think from an infrastructure perspective, you'll be able to service it there. And if you look at the shift if you want to bring semigration into account, there's a good bet that in time that growth will continue. You'll get that node will strengthen, and the demand will grow. So I think it's probably strategically long term. If you can outlay the capital and take a good position there, it's worthwhile.
What have you got in Cape Town now?
We've got a few bits and pieces, but we're working on it.
You had some stuff, and you got that business park just past Montague Gardens with Fortress.
Montague Business Park, yeah.
Yeah, with Fortress, right?
Yeah.
And
Growth Point.
Yes. And
so we got 50 and they 25.
Yes. Yeah. What else is there?
We got some stuff up in Riverside.
Yes.
Yeah. There's a few bits and pieces, but I mean, the great nodes at the moment is obviously King Industrial, really good. It's doing very nicely, and
that's a great deal, clever deal actually.
Yeah, very clever deal, good deal. But also, I mean, took a bit of time to get it going. Yeah,
interesting.
You'll know the Capetonian market better than me.
Love it. Fragmented. A couple of things I can tell you about Cape Town. One, it's fragmented. There are, if you take 100 buildings, you're going to have a roughly 98 different owners. If you take 100 buildings in Joburg, you're going to have roughly 4 owners. You know? So it's like it's just a totally different market. That's the first thing. The second thing, everyone keeps their cards close to their chest. They all have the same information, but they keep it very close to their chest as though no one knows what's going on. So it's like, Joburg will talk. You'll say, this land and that land, and people will actually have that kind of conversation. It has changed because Joburg has moved to Cape Town, and now they're kind of forcing the guys to change and adapt and be a little bit more dynamic and open. But those are and then land so expensive. I can never work it out. It's so expensive that I don't understand how I can make the rentals possibly work unless you accept a ridiculously low yield, and that's probably what it is. Yeah, but you've seen the growth there, so it probably has justified it. Over time.
And the demand's strong, so you don't have low vacancies, so good fundamental.
You moving down there soon, or?
No, I'm good.
Nice,
I'm
good.
quite happy here.
Nice.
I love going to Cape Town on holiday, but I'm really good in Joburg. I enjoy it.
It is great,
Joburg's very underrated. Yeah. I think it's a question of, I don't know, at what point does the ocean and the mountain become wallpaper? Yeah. I don't know if it ever does. Maybe I'm wrong about that. For me, the diversity and the color comes through the people, and I really enjoy the people that I know and that I'm familiar with up in Joburg. Yeah. And I don't see a need to leave them behind and to go and create another.
I think as Joburgers, we need to take back the space a little bit more. I'm really keen on that narrative. I love the idea of just making it better. And I love we're in Rosebank right now. You walk around Rosebank in the morning. Pedestrian, people going. It's really cool, different to Sandton. Sandton's like
ghost town. No soul.
Pavements.
Yeah.
Whereas here they're pavements. People walk around, and that's all you need to do is create the environment. People will use it.
Yeah.
You look at Durban Beachfront, same thing. They put that like a thing all the way to Mhlanga, and people use it. It's amazing.
But the fundamental of Sandton is you don't have anything spilling out onto the pavements.
Nothing.
Like you say, no pavements. But there's
inward looking.
Everything's inward looking. Yeah. So there's no engagement.
And look how popular, to your point, landscaping, all the rest of it. Look how popular Limbro and Longmeadow are for that exact reason.
100%.
It's just, I remember coming up to, there was nothing like that in Cape Town. So when I came up here.
Knock Epping.
Jeez, Epping. It doesn't take much. It just takes a little bit of pride in your pavement, and then you go.
Yeah.
Steph, it's been great chatting.
Thanks, John. Appreciate it. It's been good being here.
A wealth of knowledge. And I could sit here talking for like another hour.
Yeah.
Mate, it's been amazing watching you grow in your career, because I remember when you started and trying to find your feet there, and it's been brilliant, and I love where you're going, and I love what you guys are doing, and the expansion into Kenya is going to be an interesting one, because I think there's a huge opportunity there, and I think the growth rates there are going to surprise everyone.
I hope so. I like that narrative. Thank you very much.
Okay, thanks for coming.
It's been great chatting.
Sure.